Good morning, Meg.
Good morning, Joe. It was a major decision here in Oklahoma. The judge here saying that J&J was responsible for causing the state's opioid crisis, saying essentially that it caused what they call a public nuisance by aggressively marketing to doctors. In his decision, he said that J&J's opioid marketing was, quote, false, deceptive, and misleading, causing, quote, exponentially increasing rates of addiction and overdose deaths in Oklahoma. And they did say that J&J needs to pay $572 million toward remediating the problem here in the state. Now, the state had asked for $17 billion, so that was quite a lot less than what they wanted. And Wall Street had been saying that J&J could be forced to pay $1 to $2 billion. So you did see J&J's stock rise yesterday, as well as the stocks of other companies involved in other cases that could go to trial later this year. Companies like Teva, Mallinckrodt, and Endo in particular. Now, a lot of these cases are still pending, and we are going to see them start to accelerate this fall, including a massive case in Ohio, a federal lawsuit that's consolidated thousands of cases from cities and counties around the country. Now, of course, this one in Oklahoma is not over for Johnson & Johnson. It said it plans to appeal. It said in that federal case in Ohio, there shouldn't be a read-through from this case, but that they're not opposed to potentially settling there. We talked with J&J's attorney, Sabrina Strong, right after the decision, and she talked about the potential read-through from this case. Here's what she said.
Cases that are consolidated in the MDL proceeding in Cleveland, Ohio, are under different law. They have different parties, different theories, and so we do believe that those are very different.
We also spoke after the decision with Oklahoma Attorney General Mike Hunter, who spoke directly to J&J CEO Alex Gorski. Here's his message for him.
I challenge the CEO to put his money where his mouth is. The Business Roundtable, of which he's a member, has made the very daring statement that they're going to start looking out for people outside of their shareholders. This is a responsibility to put action behind his words.
Now, J&J, in saying it will appeal, says it is not responsible for the crisis here and that it acted responsibly. It's going to ask to stay that $572 million judgment until it gets through the appeal process, which it expects to take through 2021. Guys, back to you.
All right, Meg, thanks. Let's bring in Josh Jennings, Managing Director, Senior Research Analyst at Cowen. $572 million to J&J is not that much, I guess, Josh, but it's been pointed out that some of these smaller companies, they see that's a lot to them, and this may induce them to settle some of these other pending cases. Do you think settlement talks will be more in earnest at this point, Josh?
This could be. Good morning, and thanks for having me on. I do. I think this could be a catalyst for some deeper settlement talks. My understanding is that the judge in charge of the multi-district litigation in Ohio has been pressing for a settlement in front of that litigation. It's still unclear. I think Johnson & Johnson said last night that they are open to settlement, that as long as it's on negotiable terms. But this is a relative positive for Johnson & Johnson. Expectations were potentially as high as $1 billion or in the multi-billions. And so for the decision to come in at $572 million, it is a relative positive.
Josh, can you just back up for a second? You've heard that Johnson & Johnson is potentially looking at a settlement, because I thought their whole point was they didn't want to do settlements. They want to make sure they made a point of it. Did they feel like they made their point enough with this, and now they'd be willing to actually say, okay, let's make this go away?
No, that's a great question. Just to clarify that, I think they've just mentioned and stated that they're open to settlement. I think that is relatively new. I don't think that this is going to be a catalyst for them to move forward directly with settlement talks, but that has been one of their comments post this decision yesterday afternoon. So we're not anticipating a settlement, but it does seem like Johnson & Johnson has put the message out there that with reasonable terms that a settlement could be in the cards.
So, Josh, should there be punitive damages here? I'm just trying to figure out the whole sequence of events, because the FDA initially didn't have a strong feeling about how addictive these substances were, and maybe the drug companies didn't know, or did they know at the time? Because chronic pain or cancer pain, things like that. I mean, a drug company's trying to do one thing in terms of that, and they're trying to meet a patient's need. Did they know for sure that wasn't going to be the use of the opioids at that point, Josh? And did the FDA know it was going to be abused to this extent?
I like the line of inquiry here because I think one of the fascinating elements of this case in Oklahoma is that J&J was on the hook for the total abatement program. If you think about all the layers of responsibility within the whole chain, everyone from the manufacturers to the distributors, to the pharmacies, to the physicians, to the FDA, to the politicians. I was a practicing physician as a resident in 1998 to 2002. In my intern year, I knew that opioids were addictive. So I don't think anyone in the healthcare community can honestly look in the mirror and say that opioids weren't addictive, that it wasn't known clearly. All you had to do was practice in an emergency room. I did analysis back in the mid-2000s when I was working mostly through emergency rooms. 40% of my patients were coming in seeking opioids. It's one of the reasons that I left clinical medicine, actually. So I think the fascinating element of this case is that Johnson & Johnson was put on the hook for the entire abatement program. If you also look at the settlements prior to the case with Teva and Purdue settling for $350 million, you have Johnson & Johnson paying for the first year of abatement the full boat of $572 million. So that math doesn't clearly add up. I'm not a legal scholar or legal expert by any means, but we think there are some holes there. Johnson & Johnson is going to try and roll it back through the appeals process, and that appeals process won't end, at least through the Supreme Court of Oklahoma, until 2021. So they're not going to be on the hook for this specific penalty for a couple of years.
Yeah. So even the FDA. I mean, there's
potentially. Again, I mean, I think the initial label for OxyContin was that it implied that there was less.
Josh, did they not know they were going to crush it? I mean, what's the best way if you're an addict? Do you just take the pill, or what do you do with it? You crush it up, or is there? Did they not know it was going to be abused that way or something? Or?
I think there may have been some misunderstanding about the potential to crush it up and use it in other forms besides oral ingestion. But I think, the long-term of plasma levels of opioid with the controlled release OxyContin, those cause some addiction problems, clearly.
It's a slippery slope for people that, Josh, thank you, for people that have pain.
Yeah.
I broke a couple of ribs, and pretty good drugs, those things. They are. You feel,
You get addicted in like 3 or 4 days.
Can,
crazy.
Although I told you about the problem, the constipation.
Yeah, okay, enough. When we come back...
I can't describe it.
Our guest host for the rest of the show is Portfolio Manager Sarat
Sethi.
Yeah, just wait till you hear this, Mike.
Can't describe it.
High-growth companies need to ask themselves, what is the right...
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazuki chooses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
To hedge uncertainty, futures are volatile. After a positive day on Wall Street, a look at how the trade war is impacting your investments. Straight ahead.
Is the president's tough trade talk working? We debate the negotiation tactics and whether or not a deal can get done.
And a landmark decision, an Oklahoma judge finding Johnson & Johnson liable in that state's opioid crisis. It's been ordered to pay more than $570 million in fines. That corporate story and other names on the move are straight ahead. Second hour Squawk Box begins right now.
Live from the beating heart of business, New York, this is Squawk Box.
Good morning, everybody. Welcome back to Squawk Box here on CNBC. I'm Becky Quick, along with Joe Kernan and Mike Santoli. In studio with us this morning, Sarat Sethi. He is portfolio manager and equity analyst at Douglas C. Lane and Associates. He's also a CNBC contributor, and it's great to see you. Thanks for joining us this morning. You're going to walk us through some of the ups and downs of the markets and how we should feel about things?
Absolutely.
All right, we'll get to that in just a moment. Check out the U.S. equity futures at this hour. After an update yesterday, you're going to see green arrows once again this morning. Right now, Dow futures up by about 51 points. S&P futures up by 4.5. The NASDAQ up by 15.
And here's what's making headlines at this hour. Shares of Johnson & Johnson are on the rise after J&J was ordered to pay $572 million for helping spark the opioid crisis in Oklahoma. Now, that was far less than the $17 billion the state had been seeking, and certainly less than some analysts had expected this ruling to see. So J&J says it will appeal. Shares of other opioid manufacturers also higher this morning, including Teva, Endo, and Mallinckrodt. While the U.S.-China trade dispute continues, one big U.S. company made its China debut today and proved a bit too popular. Costco opened its first China store in Shanghai and had to close early after thousands tried to get in, and traffic nearby came to a standstill. Local residents said they came because items like milk and meat were cheaper than at the average supermarket. Taiwan Semiconductor is being sued by rival chipmaker Global Foundries for patent infringement. It's seeking to stop Taiwan Semi's customers from importing the affected products into the U.S. and Germany. This is significant because Apple is among those customers, along with Qualcomm, Google, and NVIDIA.
All right, Eamon Jeffers has been covering the G7 summit in France for us. He joins us now with the big takeaways from a memorable meeting with a nice shot at... It's nice there, Eamon, and you're looking casual. I know you can't wait to just finish these reports and go do something. But anyway, just bear with us. What are the highlights?
Let me give you the report first.
Yeah.
Well, look, this was the G7 where Europe figured out how to let Donald Trump be Donald Trump, right? I mean, they abandoned the idea of a communique, the idea that they're going to come up with a 14,000-word detailed agreement like they did in the Barack Obama era. That's not happening under Donald Trump. Emmanuel Macron hosted the traditional 2-and-2 press conference with the president, but then left the stage and let the president hold court with the U.S. media. So the president was more comfortable here than he was at the G7 last year, and it ended up on a much more positive note as a result of that. The president tweeting to France, thank you, France, on the way out the door. Such a contrast between this year and last year. But ultimately, this is a president who came here in deal-making mode. He signaled he wants to make a deal with the Chinese. He wants to bring Vladimir Putin back into the G7, make it the G8 again. He's signaling that he's willing to sit down with Hassan Rouhani of Iran. So he's saying the door is open for negotiations, and this is a president who doesn't thrive in these multilateral organizations, right? He wants those bilateral face-to-face negotiations, and he's found a way now, it seems, to take these multilateral weeks where you have the family photo and all the diplomacy and all of that, and turn it into a series of unilateral, bilateral meetings, one-on-one with his counterparts. That seems to work. Europe seems to have understood Donald Trump now, and they got along much better. The message from this, Joe, was one of unity, really, politically and diplomatically.
Yeah, no communique means there's no big sticking point on as far as disagreements. That's usually what you can read into one of those. Really, is that that's the way it is? Where do you fly out?
And they had a
where do you fly out of, Eamon?
We're flying out of Bordeaux.
Okay.
So we're going to drive from here. We're in Saint-Jean-de-Luz, which is a lovely little beach town just a little bit south of Biarritz. Beautiful tourist town. In fact, there's a really nice wine and cheese shop just behind me here. We're going to spend some American dollars there in just a couple minutes.
I was going to ask, if you're going through Bordeaux, I was going to actually ask you to, but you're probably...
We're going to...
You don't want to bring a bunch of stuff on the plane.
We're going to stop.
Right?
No, not for you.
Well, we got to figure out what we can... I don't want to violate any smuggling laws. We're going to figure out what we can put in our carry-on.
Okay.
Where's the hat?
Bottle of red, maybe a bottle of white. You know, the hat store is right on the other, just behind the camera here. I'm not wearing it on TV.
He's got a red beret. He won't
There's only
wear
so
it.
much I can do.
Oh, my God. Eamon, don't do it. Yeah, you know, things last forever on TV.
Right.
So,
look, I need this job. Is
that a direct...
Yeah.
You can't
Last time I had something weird on my head, Joe played it for 2 years on television.
Yeah.
Remember that?
A mohawk from the wind.
So I'm not doing it. If I wore a red beret on TV, you would play it for the next decade.
Yes.
Raspberry beret.
I would...
I know, right. That's why I'm not doing it.
I'd play it for the next 30 years. I'd live long enough to play it for the next 30 years just to play it. So Bordeaux, then where?
Yes. Bordeaux, then Paris, and then home.
So that's a connecting flight
we'll
to Paris.
We'll stop in Bordeaux. We're going to go overnight. Yeah.
Oh.
It's 2 hours from Bordeaux to Paris, or just an hour from Bordeaux to Paris. We're going to drive 2 hours from here to get to Bordeaux.
Okay.
Look, this is a rough assignment. Somebody had to take it. You know, my name was in the hat.
It looks, yeah.
The hat, so to speak. We're gonna Photoshop that hat on your head.
All right. Well, we'll expect you back, and you should be in a really good mood because you have a really good job. So
okay.
And you did a good job.
Oui.
All right, Eamon. Oui. All right.
Merci beaucoup.
All right.
Let's talk more about trade negotiations and what it's meant for the markets, the tweets, how it's impacting fixed income and the equity markets. Joining us for that is Kathy Jones. She's Chief Fixed Income Strategist at Schwab Center for Financial Research. Our guest host for the next 2 hours, Surat Sethi, who is Managing Partner and Portfolio Manager at Douglas C. Lane and Associates. Let me start with you, Surat. Just in terms of the crazy volatility, what we saw even just Friday and Monday, coming out of it, how do you feel?
It feels more of the same. I mean, I think after Friday night, it was a little bit different. And then kind of backtracking Sunday evening, I think when the futures were down big. So it seems like this is another way of negotiation. I mean, it's unexpected, but now expected. So given kind of what we've seen from the last couple of days, they seem, at least in my view, that we will get some resolution. The question is when that happens and how the road along the way there is.
We haven't made up all of the ground that was lost on Friday yet. Would you tell people to buy here?
So I think we haven't made up a lot of the ground since about 2 weeks ago.
Sure.
And I think the areas that have been the most hurt, but I don't know if you want to tip your toe into them right now, are kind of financial services stocks. And I think a lot of that has to do with the 10-year going to 1.5. And then also foreshadowing potentially a slowdown. But if you do look in that area, I think companies like Blackstone, those are companies that we really like, or JP Morgan, really good, high-quality companies that are going to do well no matter kind of what happens in the economy. Those are things that I think you could nibble on, especially in the area where we've got some valuation issues there.
Kathy, we've been paying a lot more attention to the yield curve in recent weeks and months. Are you worried about this slight inversion that we're seeing this morning? What does this tell you? What happens next?
Yeah, well, a yield curve inversion is, obviously a reliable indicator of recession down the road. The trouble is it doesn't give you much in the way of timing or depth, and it can be a false signal. We've had a couple of false signals over the years. I think what it signals is that the market thinks the Fed is too tight and the Fed needs to ease. And if they go ahead and signal increasingly that they're going to cut rates, I don't necessarily think that does damage to the economy or to the markets. It's really now the market waiting and saying we want easier credit conditions.
Is the market waiting for signaling, or is the market waiting for an actual cut?
Well, I think at this stage it's waiting for an actual cut. And not only is it because the economy is slowing down, inflation's below target, the yield curve's inverted, but the plumbing of the Fed is a little clogged up at the front end, and if they cut rates, that kind of eases things up.
Would 25 basis points do it, or you think it needs to be 50?
Well, I think in September we're expecting 25. I think it would be a high bar to get 50, and it might actually backfire because it might signal, oh, what's the Fed see that we don't know? It may signal alarm, so I think 25.
I think watching too much of a cut then signals that things are much worse and nobody else has seen it except for the Fed. But on the other hand, if they don't cut and we get this inversion keep on going, you're going to have a lot of technical factors in the market that individuals can't do anything about. And once the machines or the algos start selling, then selling begets selling, and then you start losing. And then the worst thing we can do is lose consumer confidence. and industrial confidence, and then that kind of, we would actually end up in a recession because of something like this.
So if you see selling start to pick up, you wouldn't necessarily look at that as an opportunity to buy. You'd wait and see what happens with consumer confidence before?
I think if we get kind of December selling,
Yeah.
then I would pick up like we did in December. I think there's an opportunity there where good companies are being sold not because of fundamentals, they're just being sold because people are reallocating again.
Are we not past that idea that the Fed has some magic window into what's going on? I mean, I just wonder about, because if the Fed really did operate, in all fairness, Powell has refused the opportunity to say, we're making technical adjustments to the short end of the yield curve. We just need to fix this thing, and that's really the reason we're cutting.
It's like, when has the Fed ever forecast anything effectively? If they think things are worse than they are, they're probably better than they are.
But there would have been times when they could detect financial stress in the system.
That's what you would think.
Are we seeing anything?
Then why don't they have a better forecasting record if they actually do know something the rest of us don't know?
Essentially an impossible job, I think. But
that's why I don't buy that anymore, that we think, oh my God, the Fed knows something, because we know they know nothing, right?
I think it would be taken as an overreaction.
Yeah.
And that would trigger more overreaction in the market.
Yeah. But so if it's 25 basis points in September with signals that, we remain open to further cuts, is that what you're expecting?
Yeah, and I think so. And it wouldn't surprise me if we see, I think the market's pricing in 2 to 3 cuts between now and early next year. And that wouldn't surprise me if we continue to see the global slowdown. If the trade issues don't get resolved in some way that will boost investment spending and confidence amongst businesses, I think a couple more after that would be reasonable expectations.
I mean, it is really staggering that we're talking this way now, because there was a consensus view we needed to march back to normal. Sure. And that that was 5 or 6. And there was the crisis. We came down from 5 or 6.
Nobody thought 5 or 6 was... People were talking 3 would have been a stretch goal.
Eventually back to at the very beginning of the... Why wouldn't it?
I mean, okay, maybe 10 years ago we thought that.
Well, that's what I mean.
Oh,
but
yeah.
There was the idea that the financial crisis caused us for 10 years to stay at 0.
Lower highs and lower lows for 35 years.
But
in every cycle.
Not where you turn back down at 2%.
No. But you've also got 16 trillion of negative global debt.
Sure.
Well, that's part of the whole thing we're witnessing. Right. But, that's when Powell, when he said we're a long way from normal, he was still in that old mindset back then. I mean, we thought we had, how many cuts do we have on the way down? 30?
Yeah.
And what do we do on the way back up? 9? And the world almost ended because we did 9. That's why people still worry that we built some kind of house we can't get out of here, too, right? A Roach Motel.
So it's us stocks, to me, are looking ahead to see if fourth quarter, first quarter earnings are plausible or not.
Yes.
We're talking about a big, uptick in earnings growth on paper for the first quarter.
To maintain the multiple we have today, we're going to have a flat to up earnings for the next couple of quarters. And I think that's going to be interesting. I think the consumer stays strong, which it is right now. I think you can do that. And I think the market can kind of bear that. But you also get the other aspect of, with interest rates at 1.5% for the 10-year, there's no other alternative.
Yeah, you got support for the valuation.
So you've got support for valuation there. Whether you really think you're paying 20-plus times earnings for consumer staple stocks, it's better than buying a 30-year bond at these levels. So those two are kind of offsetting.
We have this guy Wilson on today from Morgan Stanley. Did you look at the notes? Did you see his?
Sure.
Did you?
Well, he's the uber pessimist.
But his mid-2020 target, he's got a bullish, a neutral, and a bearish case for it. And the bearish case, I mean, the multiple is at 16 for all three. Right. What's changing is the earnings, the EPS, and he's got a number for a 2,400 target on the S&P. The earnings number is just like it's unheard of. I mean, that'd be a recession.
Right. Yeah.
We'll get to talk to him about that. Anyway.
Kathy, thank you very much. Surat's going to stay with us. We've got lots more to talk about today.
You'll be here for that, Surat. You can help elicit some information from Wilson. Coming up, former NASDAQ chairman and CEO Bob Greifeld joins us to discuss shareholder value in terms of the BRT, a Business Roundtable, the trade war, and some of these wild market swings. He knows something about shareholder. And then low mortgage rates boosting home building stocks despite recession anxiety. We'll find out which names in the sector could be a buy right now. Stay tuned. You're watching Squawk Box on CNBC. What was the
Squawk Box.
If it isn't dead, If it ever comes back, we'll come back to.
On September 6th.
This meeting of the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day. At Gunwharf Quays. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids chooses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Welcome back to Squawk Box. Take a look at the equity futures right now. They have been modestly higher all day, actually pretty much at the highs of the morning. The S&P 500 up about 1/3%. Dow up 95 points right now. NASDAQ up 31, looking to add to yesterday's gains, which won back about, let's say, 40% of Friday's losses. We're right in the middle of the August range here for the major indexes.
When we return, former NASDAQ chairman and CEO Bob Greifeld is our guest. And later, is the president's tough talk and tweets helping or hurting the markets? We'll debate that and whether a trade deal is considered a win for the Trump administration. Squawk Box will be right back.
There's golf. And there's the golf.
You're in charge of hiring, and Indeed has solutions, like our library of job description templates, which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV. Or when he's hungry. Okay, no pigeon then, but there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets are only £3.19. And a 4-pack of Grower Selection sweet corn cobettes are just £1. Bring it home with Asda. Save money, live better. Selected stores online, subject to availability. Card 260 grams.
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at Chessington.com. It's Britain's wildest adventure for all the family.
With a welcome bonus from the no annual fee British Airways American Express credit card, your next getaway's not far away. So whether it's welcome to drifting down the canals of Amsterdam or bienvenue to midnight strolls in Paris, say welcome to a European adventure. Spend £1,000 in your first 3 months of card membership and get 5,000 bonus Avios. That's enough to get away to Europe sooner. Search BA Amex to find out more. Representative 22.9% APR variable. Applicants must be 18 years or older, subject to approval. Terms, taxes, fees, and carrier charges apply.
Man, it's been some summer. Feels like the carnival could go on forever. Capture the joy on your new Huawei P30 series, and it really will go on and on from just $19.99 a month with no upfront cost from Carphone Warehouse. Stretch out the long summer days with the hot phone of the moment. The Huawei P30 series, now with up to £100 cash back. Pull a switcheroo at Carphone Warehouse. Offer ends 4th of September. T's and C's and contract apply. Visit website for details.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of Off-Peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters. £1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
The Business Roundtable out with a statement last week redefining the purpose of a corporation. The updated definition includes a commitment to all stakeholders rather than just shareholders. Join us now to talk more about this pledge, Robert Greifeld, chairman at Virtu Financial, former chairman and CEO of the NASDAQ. Bob is also a CNBC contributor, and I've weighed in on this a lot already, Bob. And there's a time and place for being a little bit cynical, but I'm exhausted from how cynical I was about the whole thing. And I read your comments, and you're just going to get me going again. So I think I'm just going to let you maybe let you opine on this. And I'm just wondering, if you were still active at the NASDAQ and you had to answer to PR concerns more than you do right now, and if virtue signaling was something you could still benefit from, do you think you'd be able to speak as frankly and as bluntly about this? Because you think this is kind of, I don't know. Well, I'm going to let you say what you think of it. But what do you think of the whole idea of the Business Roundtable with this new idea?
Well, Joe, good to be here, and I don't want to get you worked up this early in the morning.
I know.
This early out here. But I would say this. There's certainly, to me, an element of pandering to the press with respect to what the Business Roundtable has said. And I would also caution everybody to think that if the socialists are in power, this statement is not going to change the focus on for-profit corporations. That being said, I think corporations today operate in a very principled way, and they really operate in what I call enlightened self-interest. There's a lot of comment about what Milton Friedman has said with respect to what corporations have to do, but I like to think about what Maslow said, who was born in Brooklyn like 4 years earlier than Friedman. And he talked about the hierarchy of needs, and when you get up that hierarchy, after you have profit, you certainly think more in an enlightened fashion, and a lot of what Business Roundtable is doing is self-contained in the operations of corporations today. And I certainly get worried when we see Business Roundtable trying to codify this. I never want to be in a situation where I have a public company CEO saying that we had a bad quarter financially, but we had a great quarter because we had different ESG goals or other aspects that are not financial. That's a wrong way for corporations to operate.
That was a new sort of a wrinkle that you introduced me to, that these guys could actually use it as instead of well, we had some currency headwinds, or instead of some weather, they could say, well, we're doing a lot of great ESG stuff, and okay, we didn't make it, but it's okay because we didn't do as well, but we were certainly feeling good about ourselves. I mean, there's so many different ways you can look at it. Number one, if you say to Elizabeth Warren and Bernie Sanders, you've been right all along, we've been profit mongers, and now we've seen the light, do you think that's going to satisfy them and they're going to say, oh, now you're good corporate citizens? No, it just emboldens them to continue along the false narrative that they're preaching right now about corporate America. And no one, after the CEOs did this, no one said, kudos, guys. They all said, oh, now you guys, it caused a financial crisis. You got barbarians at the gate. So now you're seeing some religion. They're asking for it. And Milton Friedman, the other thing, See, you did get me going. Hey, I wish you hadn't.
Yeah, Joe, you said you weren't going to get going. That didn't
Milton
take very long
Friedman,
there.
do you know how hard it was for him to make the case that the Adam Smith invisible hand, free market, profit incentive causes accountability so that you do things that eventually, with your profits, you need profits to keep a business running and to hire people that pay taxes and to satisfy customers. And all the things that you do as a corporation already are positives for society. You don't need to go ahead.
Joe, we're in violent agreement, but I'd also add what Milton Friedman said is you have to maximize profit within the confines of the law. And most importantly, the moral ethos of the time.
You want to hire on a CEO incentive causes accountability. You want to hire good people and people that are, I mean, unless you just assume that everyone's going to be Martin Shkreli, the pharma bro, unless you give them guidelines. I mean, normally you're hiring people that you hope are, in addition to doing things for shareholders, they're going to work within the confines of the community and try to help their employees and give employee raises. But if there comes a time where you have a bloated workforce and you need to cut back because of a slowdown in the economy, you can't all of a sudden not do what you need to do, or else the whole company goes bankrupt, and then everybody is out of a job.
I can't disagree with that. And Shkreli certainly did not in any way, shape, or form conform to what Milton Friedman was talking about.
No.
He did not follow the law.
And if you continue to rape, pillage, and plunder as a CEO, it's going to come back eventually and haunt you. I mean, I'm not going to use J&J as an example, but you need to think long and hard about how you affect the environment and what you do, because eventually if you're doing things that aren't productive for society, for your community, for your employees, you're eventually going to see it in the shares anyway.
Bond yields everywhere.
Right. So we're saying the same thing. I think corporations have to maximize profit, but that by itself is not enough. You have to have an enlightened self-interest, how you run the corporation. You have to build it over a long period of time.
As an example.
And that's your enlightened self-interest, and I think that's how things essentially work today, and they work within the confines of the law. And if they're not, then a structure in place to bring the Martin Shkrelis to justice.
Do you think you would have said this when you were NASDAQ CEO? You would have been going, great idea, BRT. I'm with you 100%. Would you have had a different take, you think?
Well, I think when you look at the BRT thing, you can also say that they're just changing the ordering of the words, that the actions are not that much different. But no, I have a very deep degree of difficulty with anything that gets away from actually the fundamental mission of the corporation. You have to do other things. You cannot just maximize profit exclusively, as we said Friedman talked about, but you have to make sure that's first among equals, right? You cannot be there at the end of the quarter saying, I didn't hit my targets, but I have these number of good things I do. That doesn't fly.
What about some other topics to talk about? Marco Polo's and GE. What do you think? Is there anything to that?
Well, you know what I said on CNBC a number of months ago, when you look at the fact that GE said they were making $2 a share, then they're making $20 a share, one of those numbers are fundamentally wrong. And I think what you see when you release quarterly earning numbers, it's subject to U.S. GAAP. And let's say GE has 100 different businesses. And in each one of those businesses, they take the most optimistic accruals, the most optimistic viewpoint. You multiply that by 100 times, you'll end up with $2, right? But if you take a pessimistic viewpoint, you'll end up with the 20 cents. So my feeling is something was fundamentally wrong with that culture. I think, with respect to long-term care, we hear certainly very good points with respect to how they did accruals. If you take that culture, that philosophy, multiply it across 100 different businesses, you'll come up with a result that misleads investors. And what I said the last time is important to recognize. We have Sarbanes-Oxley in place, and myself as a long-standing CEO and the CFO, you sign that document. And if you sign that document, those numbers are wrong and misleading, there's criminal penalties that will be coming. So it's going to be interesting to see how GE plays out over the next several years.
What do you think of the trade war and the way it's being handled by President Trump?
Well, I want to give the president credit for taking on this task as somebody who tried to sell, software into China for a long period of time and found it basically impossible. This had to be fought. With respect to the trade war, I think both sides are losing. But to me, what's interesting is the losses on the U.S. side, to me, are temporary. On the Chinese side, it clearly can be permanent. Supply chains are moving today, right? Not just to Vietnam, but to other places. And when they move, they will not come back. So I think China's at longer-term risk with respect to this trade war. And when the trade war is basically resolved, I think the U.S. will get back to where it should be. So I look at how that plays out. I think if I'm the Chinese, I'm very conscious of that. All the CEOs I talk to, they are diversifying supply chains. And when they do that diversification, they're not coming back the way they were in China before.
You on vacation or something out there?
Well, I'm here having fun with you, Joe.
Oh, are you?
That's vacation to me.
Yeah, but it's a nice backdrop, and I know all of Colorado in the summer is it's like you wouldn't live anywhere else, really, if you try that. You
The
know
weather is spectacular.
It's unbelievable.
I have to admit it.
It is.
It really is. Yes.
In Boulder, it's 300 days of sunshine, no humidity. Perfect.
Yeah.
Anyway,
you gotta love it.
You do.
Good.
Thanks, Bob Greifeld.
Thank you.
All right. Good to see you. Thanks.
And coming up, a look at names on the move this morning in the pre-market. And as we head to a break, take a look at the futures again. Dow set to open up about 90 points. S&P 500 up just about a third of 1%. Squawk Box.
Investment mistakes?
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should. Because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you free clones of your best employees. What's that? Oh, no cloning. But there are online skills tests.
Using Indeed skills tests reduces time to hire by 27% on average. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of home.
Still to come on Squawk Box, elevated recession fears and market woes. We will tell you where you should be putting your money to work right now. Is the president's tough trade talk working with China? We'll debate his tactics and the possible outcome. And will the Oklahoma opioid ruling against Johnson & Johnson give the green light to other states for lawsuits? We will talk about that. Squawk Box will be right back.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets are only £3.19. And a 4-pack of Grower Selection sweet corn cobettes are just £1. Bring it home with Asda. Save money, live better. Selected stores online subject to availability. Card 260 grams.
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at chessington.com. It's Britain's wildest adventure for all the family.
We've created unlimited data plans for your business because 1 minute you're the receptionist.
Hello, how can I help?
The logistics manager.
Okay, lift at your end. That's it now, to me.
The new business consultant.
Will do. I'll pop over and give you a quote.
And you've still got to make the tea. Your business doesn't have limits, so why should your data allowance? New unlimited data plans from Vodafone Business. The future is exciting. Ready?
Max download upload speed apply to data. Coverage may vary. Terms at vodafone.co.uk/terms.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of off-peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters. £1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
If you were going to panic, now's the time.
Bakers, your time is up.
Nice wobble.
Delicious.
Let the baking season commence. The Great British Bake Off starts tonight at 8 on Channel 4.
Hey, baseball fans. Can't watch the game? Can't be there? TuneIn has you covered. Hear every MLB game live as it happens, or catch it later on demand, anytime, anywhere, all season long. Just search MLB today.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
All right, welcome back to Squawk Box, everybody. 3 names that dominate bond investing: Jeffrey Gundlach, Dan Iveson, and Scott Minerd have employed the same investing strategy, and they've all fallen short when compared to their peers, thanks to the monstrous rally that we've seen in U.S. corporate bonds and treasuries. Obviously, this came as a surprise to a lot of people, but the 3 all tell Reuters that they're not worried, saying they can live with the underperformance because of the greater damage they see coming for corporate bonds. Yeah, it's been an odd time in bond markets all over the place.
Time now for a look at stocks on the move. Dom Chu joins us now with more. Hey, Dom.
All right, good morning, Joe. It's a bit of a mix this morning. We have one big earnings report to tell you about, first of all, and that's Smucker's, because that stock right now is down almost 6%, you can see, in the pre-market trade, although on relatively thin pre-market volume so far. Now, this is the consumer products company behind Folgers Coffee, Jif Peanut Butter. They miss on earnings, they miss on revenues, and they cut their full year 2020 sales growth outlook as well. They cited things like deflationary pressures in coffee and peanut butter, so those shares off, and you can see there they had been on a nice uptrend and then downtrend for just about the last 4 or 5 months now. Also watching what's happening with Comcast shares, relatively stable pre-market, nothing really going on just yet. However, that stock just got reinitiated with an outperform rating by analysts over at Wells Fargo. They've got a $50 price target on the shares. They like the diversified revenue base, and of course, Comcast up marginally here and near those record high levels that we saw a couple months ago. Remember, Comcast, the parent company, of course, of CNBC and NBC Universal. And we'll end with what's happening with WTI crude. It's trying to snap a multi-day losing streak at this point. You can see here up about 1.5% so far in trading today, as softened rhetoric on the trade front from President Trump and his administration out of the G7 meeting is helping to buoy some of those prices a little bit of a tick higher. But you can see here still a massive move lower. We're down about 30% in WTI crude since its highs last year. WTI crude also a focus, Mike, because later on this afternoon, after the closing bell, I know you'll be watching it, the American Petroleum Institute's weekly private sector inventory data coming out for oil at about 4:30 this afternoon. Back over to you.
Yeah, Dom, that'll keep me going through closing bell just to get right to that. Appreciate it, sure. Dom Chu. Joining us now with where he is putting his money, Cole Smead, Managing Director and Portfolio Manager for Smead Capital Management. Morning, Cole. We've got kind of a split market here, right? Everyone kind of can acknowledge U.S. consumers in very good shape for all the reasons we know. The industrial economy having some hiccups and a lot of defensive type stocks, growth stocks, quality stocks, so to speak, have been doing well to the exclusion of many others. So where is your stock picking process bringing you within all those factors?
Well, it's not dissimilar to where Buffett's been sitting. Buffett's been the buyer of financial stocks en masse, more so than really anything else he's had in the last 6 to 12 months, with maybe, not talking Apple. That there's a huge opportunity. You were just talking about the 3 bond managers who have been kind of roughly short the treasury market, or we're, thinking yields are going to climb. Michael Hassenstab's in that boat too. And everyone on that side of the boat has got punished. And financials would obviously benefit from long-term economic growth and higher rates. And that is something that people, or as you mentioned in the quality kind of safety trade, they perceive that that's just not likely in the interim. And the question is, who's going to make the money? The people that are betting for safety and low rates, or people that are betting that the world is going to change at some point?
So what sort of financial stocks, essentially just looking at the banks, which, as you say, have been punished, not just because of where yields are, but just as a general sense of if we're getting toward the end of a cycle, maybe they're not the place to be.
Yeah, we own Bank of America, Wells, and JP Morgan. Wells is obviously the most contentious just because of they need a CEO. They're coming off of all the woes they've had as a bank. Interestingly, we were looking back. We've been an owner of Bank of America since early 2012. And Brian Moynihan might be the most understated CEO we've really ever seen. Jamie Dimon's the noted banker on Wall Street. And Moynihan's this lawyer by background, came from Fleet Financial, and has just done all the right things, produced fabulous returns, and finds himself in a position where he was on your show 6 months ago saying the Fed does not need to raise rate or lower rates. And here is the insurance cut. And Moynihan thinks the economy is plenty strong. So we're in the Brian Moynihan camp as it pertains to the economy. And the biggest risk is that corporate America is borrowing a ton of money. It's great for Wall Street. As you were talking about the prior segment, as you look at executives looking to a greater good in society, well, they're doing that with the lowest rates, roughly the most confidence they've ever had, and the cheapest money to talk about doing good things in society, when the reality is they're funding most of their buybacks with purely debt. Okay, 56% of buybacks are coming off debt. So I think it's more symptomatic of a late bull market arena, not here's the next great leg up in 5 years more of this game going on. The insurance cut was good for Wall Street and good for keeping stocks at ease, but it doesn't really change what's going to happen in the next 5 years for people waking up to what could be a tough market.
So I agree with you on the financial side, and I think Bank of America, JP Morgan are good companies there. One of the fears of kind of everybody looking at this is credit quality and kind of being at the 8th or 9th inning. Our view on that, and I don't know if that's kind of where you look at it, is that's baked in given the valuations. You're trading at price to book. You're trading at one of the lowest multiples and great balance sheets as well.
Yeah. Well, I just look at the earnings multiple. If you want to find cheap valuations in the S&P 500, if you want to go to the lowest PE quintiles, you'd have to end up in financials. There's no way around it as it pertains to looking at price to earnings ratios as an example. And the oddity to this bull era, if you look from 07 to today, the oddity is the most expensive PE quintile of the S&P 500 has done the best. That's the opposite if you look back at any other period of market cycles. The cheapest stocks have done roughly the worst. So the irony is the banks find themselves in the cheaper quintiles of the market. They have everything to do with economic growth, rates, exactly what people have been instructed by the market in the last 2 months to not think can ever happen. We're contrarians by nature, but we've owned these for a long time. We think people are going to be punished in the bond market in such a way where retirees are probably going to think, how did that ever happen? When the reality is Buffett's advocating for people to own the stock market via Vanguard, not because he's bullish on stocks, but because he thinks bonds are so terrible over the next 10 years.
So you say, as a firm, contrarian by nature. Where else does that take you at this point? I mean, I know you've owned and spoken about Disney plenty. Does that qualify as a contrarian bet right now? Because the stock has certainly done well.
Yeah, no, and they're in their little spat with Sony over Spider-Man, which has been kind of the talk du jour the last couple days. 2 years ago, ESPN was dead. What's Disney going to do? Netflix is going to win the game, and the world's going to be ending with Netflix and Amazon. And now you wake up at 35% higher stock prices. And in our opinion, not much has changed in their business. And people are just more excited about a higher stock price, ultimately, is what I would tell you. So that on the margin's not good. It looks like people are just kind of running out of ideas to pitch on the street, ultimately. As it pertains to, other places that I think are more compelling. Discovery Communications with HGTV and the Food Network Travel Channel. When they brought in Scripps, that's how we got into that deal from the beginning. And we got John Malone there trading at great valuations with great franchises. And Chip and Joanna will be as big as they've been at Target when they get their channel. We just think that's going to be a big driver. Other places that we're finding about, you're talking about oil. Yep. Oil skipped a 10-year bull market. I mean, you want to talk about depressing. We've been long-term oil bears, and we find ourselves being the biggest buyer of Oxy out there.
All right, Cole, thanks a lot. Ran through a lot. Talk to you soon.
Thank you, guys.
When we return, as the trade war continues, is the president shifting his tactics and tone to get a deal done? We'll talk about that after the break. In the meantime, check out the futures this morning. We've been in the green all morning. Dow futures now up by about 82 points, so we have been building those gains. S&P futures up by 8, the NASDAQ up by 26. Squawk Bucks will be right back.
I like to make my life easy.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
You're in charge of hiring, and Indeed has solutions, like our library of job description templates, which are free and easy to customize. We also give you the pigeon of perception, who only coos when you find the perfect CV. Or when he's hungry. Okay, no pigeon then, but there are free job descriptions.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/start today to use our library of completely free job description templates. Terms and conditions apply.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets are only £3.19. And a 4-pack of Grower Selection sweet corn cobbets are just £1. Bring it home with Asda. Save money, live better. Selected stores online, subject to availability. Card 260 grams.
China fixed the daily midpoint rate for the yuan at levels not seen for more than a decade. As the trade war continues, Eunice Yoon joins us now with more. Not what I was talking about. Not what I was talking about. Where we're supposed to be getting along here doesn't include devaluing your currency over there in China, Eunice.
Yeah, well,
actually, the central bank set the value of the yuan stronger than people expected. And so that was being taken as a sign that the central bank wanted to stabilize the currency. So that's a good thing, right?
Yeah,
to stabilize the currency. And it might be because of all the confusion going on over the trade talks. But the foreign ministry was trying to clarify Beijing's position, which is that they haven't heard of any of these phone calls that are at high level between the U.S. and China trade negotiators. And of course, this comes after President Trump had said that China had initiated the phone calls to the U.S. to restart the trade talks. So the foreign ministry said that the two teams are in contact. And but it also went on to say that the trade talks that the trade dispute should be resolved through dialogue. The U.S. needs to stop all wrongful action, and that the U.S. should create conditions for talks based on mutual respect and equality. So there are two ways to read what's happening here. One is that Beijing could be, because from the very beginning, Beijing has been trying to avoid looking as though it's an instigator in the trade war. So it probably is trying, it could be that Beijing wants to, doesn't want to appear as though it's initiating this phone call, even if it is. And then the other way is probably more important in that Beijing could be sending a signal here because it's been using a lot of the same boilerplate language that we've seen since May when the trade talks stalemated. And so because of that, we could see that Beijing is sending the message that officially it hasn't changed its position at all. And that would suggest then that investors might want to be careful about being overly optimistic that a trade deal is going to happen because it could be premature. Now, separately, the State Council has now unveiled a 20-point plan to try to unleash the power of the Chinese consumer. And that includes easing or canceling restrictions for auto purchases, setting up free trade zones to try to get greater sales of foreign goods, and also attracting famous brands, including international ones, to open stores. So, Joe, if you're feeling half glass full today, as you said that you were, then this could mean that Beijing is trying to get more consumers here to buy American products. Or if you're slipping back into your usual glass half empty mode, then it could mean that the authorities here are worried about consumption, not being a big enough driver for the economy, and that consumers are getting worried about the economy and the trade war, and are doing what a lot of Chinese people usually do, which is save instead of spend.
No, I'm only
but
half.
I don't know which mode you're in right now.
I'm only half empty about how much we can really fix with our relationship, our trade relationship with China. I'm half empty. I'm half full about everything else usually, and completely
Sometimes you're full of.
Completely full of it about a lot of other things. But I was just thinking if at one point how it really would be nice if it just seems like both countries, like we could really go into the future together if we could find some common ground here. And, China's got a lot of people they'd like to bring up to the standard of living that we enjoy in this country and other Western countries. I don't know what the GDP, do you know now in China per capita GDP, is it $10,000 to $15,000 or something? Eunice, is that about right? I mean, you got a way to.
I can't remember. I haven't checked the latest.
It's 50 or 60 here.
Yeah,
so
but no,
obviously, anyway, we all move forward.
It would be good, but we're seeing the positions harden, right?
Yeah.
I mean, I think it all depends on which side is, how much each side is willing to give.
Right.
And so from the Chinese perspective, they're feeling like actually, that the U.S. needs to also give in as well. And,
right.
I don't know.
No, you're wrong on that. We're in the bargain. We're in the. We do a lot of really good. We're not the ones stealing things. Anyway, we better go.
Okay.
You're not going to be able to answer that.
Yeah. I think we're running out of time.
Right.
Eunice, thank you. Right now, let's welcome Mike Fuchs, Senior Fellow with Center for American Progress. Also, Rachel Bovard, who is Senior Director of Policy with Conservative Partnership Institute. Rachel, what do you think? Are we setting ourselves up for success or failure here?
Well, I think we're setting ourselves up for success. I mean, Donald Trump is holding China accountable to international standards of trade. Everybody calls it a trade war, but what it really is realigning the trade relationship to international standards. It is well known that China is a trade cheat. And for years, America has been the patsy of China's ability to manipulate our markets. And Donald Trump has simply said no more. And so that's, I think, what we're dealing with right now.
Mike, we had Sarat sitting in for you for the moment. But what do you think about this? Is there progress that's going to be made? Are both sides going to dig in?
I think at the moment, unfortunately, I'm a glass half empty kind of guy on this. I think the problems with this trade war are manifold. But first and foremost, I don't think I understand, or anyone really understands, what the end game is here for the trade war that President Trump has launched. We've been on an 18-month-long roller coaster, and the whiplash is intense right now. Just a few days ago, obviously, President Trump was talking about ordering all